some positive movements in the Chinese yuan. At the moment, because the onshore dollar deposit rates are much higher, that's encouraging exporters to continue to keep most of their export proceeds in US dollar. But if we see further downside to the US dollar, which I believe we will start to see in the coming months now that the Fed has paused, I think that's going to convince more of the Chinese exporters to convert increasingly more of their accumulated FX proceeds, and that's going to be another catalyst to push the yuan stronger. So I'm bullish on the yuan, and that's why I'm recommending positioning long for the yuan.
And you're bullish for some of the other Asian FX that could be the beneficiaries of that China recovery as well, like the baht?
Exactly, and the Thai baht really stands out because they are very reliant on tourism, and we're starting to see Chinese tourists going into Thailand, and the Thai tourism recovery it's well on track to meet and possibly exceed official forecasts. And Thailand's current account, which had been in deficit because of the twin negative impacts of the pandemic and also soaring freight costs, have completely turned around, and Thailand is now back towards a current account surplus position. So that puts Thailand and the Thai baht in particular in a really, really good position, and I'm expecting further appreciation for the baht.
I like the question of what's wrong with the won, and are we seeing that depreciation trend going a little bit too far now?
I believe so. Look, the won is the worst performing Asian currency this year, and this is despite the dollar being on the soft side, and also overall, I just get the feeling that investors are very, very negative on the Korean won, partly because of recession fears in Korea. Now, Korea has managed to avoid a technical recession. Q1 GDP has managed to post positive growth. At the end of the day, the won is still weighed down by the fact that Korea still runs an overall goods deficit. But I believe that will start to turn around in the coming months. We've seen commodity prices, particularly oil, coming off sharply. That's going to lead to a big reduction in South Korea's overall import bill. And importantly, we've noticed a very promising trend. While exports have been weak, we have now 2 months in a row where semiconductor exports from Korea have started to pick up. So perhaps we've seen a bottom for the semiconductor cycle, and if that trend continues to pick up, then I think Korea will be in a position to start returning towards an overall goods trade surplus, and historically, once that happens, that tends to see the won rally.
Khun, always great to chat with you. Khun Go, Head of Asia Research at ANZ. Let's get you to Bell for a look at commodities in particular. We've seen this chaotic sell-off when it comes to crude markets, really pricing in these fears of a global recession.
Yeah, that's absolutely right. And it's pretty interesting when you get a more than 7% drop for WTI at the open. It really was just overshadowed this morning by the nearly 60% drop into Pac West. But it is still very notable for us, even if we are seeing those losses being really pared down, still down around 2%. Yes, it really is a reflection of those recession fears in the market. Also, this plan by OPEC Plus to regain control of pricing doesn't appear to be working just yet. But when you take a look at this chart here, the moves in WTI over the course of this year were off about 17% at this stage. But also when you change on now, when you take a look at those losses, the flow-on effect of this is that a lot of investors are just simply choosing to stay on the sidelines. This chart here takes a look at WTI implied volatility, and that has now spiked to its highest level in more than a month. Yes, of course, you do need a degree of price swings so that traders can make profits, but still many of them are just choosing to stay out of the market completely now because of that risk that they could be completely burned. And at least with Brent, for instance, when you take a look at open interest, that is now at its lowest levels since early March. Of course, we have seen a lot of markets close over the course of this week, but certainly a contract that we're also watching Brent crude. Heidi online at the top of the next hour.
Let's get you to Vonnie Quinn with the First Word headlines now. Vonnie.
Heidi, thank you. Well, as Annabelle was saying, PacWest tumbling in post-market trading after Bloomberg reported the U.S. regional lender is weighing a range of strategic options, including a sale. Sources tell us the bank has also been considering a breakup or a capital raise. PacWest said last month that deposits had stabilized after a rush of withdrawals in March forced it to shore up liquidity. Joe Biden has picked Federal Reserve Governor Philip Jefferson for a promotion to vice chair. Sources say Biden will also nominate economist Adriana Kugler to be an open board slot. The selections could be announced as soon as Friday. If confirmed by the Senate, Kugler will be the central bank's first Latina policymaker in its 109-year history. Morgan Stanley is facing a lawsuit from an external recruiter who claims it discriminated against him because he's black. Anthony Fletcher says the bank deprived him of commissions and paid him less than non-black third-party recruiters. He also says his black job candidates were required to accept lesser roles than those they previously held. Morgan Stanley says the suit has no merit and is based on a fee dispute. Saudi Arabia is reportedly preparing to offer soccer superstar Lionel Messi a $400 million contract to move to the Saudi Pro League. Messi is currently contracted to Qatar-owned French club PSG, but was suspended this week for travelling to Saudi Arabia without permission. The reported sum far exceeds the more than $200 million Cristiano Ronaldo secured to play in Saudi Arabia until the summer of 2025. Global News, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Bonnie Quinn. This is Bloomberg. Sherry.
Hi, Bonnie, coming up. Franklin Templeton says the U.S. banking system has been stung by the pace of the Fed's rate hikes. Our interview with CEO Jenny Johnson is next. This is Bloomberg.
Turn to the U.S. job market.
There are already some signs the labor market is going to weaken.
We've just started to see recently claims just tick a little bit higher.
This Friday, Tom, Jonathan, Lisa, and Mike will bring you crucial data and expert analysis at terminal speed.
This is a really, really good report for minorities.
Can we get a painless disinflation?
This is a chairman that wants a 4.X% unemployment rate. The microdata doesn't show that.
The April Jobs Report, Friday on Bloomberg Television and Radio.
All right, watching FX, of course, we already had a pretty bearish setup when it comes to how Wall Street was approaching dollar weakness anyway. And of course, a move from the Fed, expectations now of a pause, potentially seeing further downside. The debt ceiling standoff, recession scenarios are really some of the perils that we're facing when it comes to dollar volatility as well. Watching some of the other currencies, of course, the Hong Kong dollar is in focus. We had that defense of the currency peg as well, buying 4.671 billion Hong Kong dollars, but also raising that base rate, of course, as we see post every Fed decision in the Fed tightening as the Fed really hints at that final move, that base rate increase to 5.5% from 5.25% of 1% to, of course, protect the local dollars pegged to the greenback. The other trading pair that we're watching, not just the yen trading against the dollar as we see this kind of haven demand continue, but also watching the moves that we see in Aussie yen as well, wiping out those combined gains from the BOJ and RBA decisions. Remember, that is really trading as a macro hedge when investors turn more defensive, Sherry.
Yeah, we are also getting the statement from the Bank of Korea as well, reacting to the Fed's rate decision, saying that they're closely monitoring markets as